Welcome to TP Academy's third installment of our series on HMSA's Payment Transformation Program. In our previous lesson, we reviewed the 5 patient engagement measures which help gauge your level of transition from fee-for-service to value-based care. Now we'll investigate how your performance measure incentive payments are calculated and the practical considerations for this new method of quality scoring. We won't review the measures, so be sure to use COSIVA or HMSA's Provider Resource Center for more information. Payment Transformation pays a performance incentive according to your score on 21 separate measures. This payment is broken into 4 parts paid at quarterly intervals. Your first one was in June, and the other 3 will be in September, December, and next April. Instead of paying it all at once at the end of the year, HMSA wants you to benefit from this money while you're working to transition toward value-based care. You can use it to help change your practice in ways that will enable care for more people and reduce costs through improved quality. This advanced payment is paid at 80% of your performance from 2016 using either your 4th quarter P4Q score from last year or your 2016 Payment Transformation Program score, depending on whether 2017 is your first year or not. The formula is 80% times last year's performance times your maximum payment potential. For example, if your performance was 92% last year, HMSA multiplies this by 80% and then multiplies that by the maximum possible amount, which is determined using your patient attribution and your PMPM rate for each line of business. If you end up actually earning more than this amount, your 4th quarterly payment next April will be increased in recompense. On the other hand, poor performance means that HMSA will recoup the overpaid amount by reducing your last quarterly payment to balance the difference. Then, next year's performance payments are adjusted according to your performance over 2017, multiplied by 80%. Essentially, HMSA pays you in advance with the presumption that you earn at least 80% of what you earned last year. After the year ends, you're paid the difference if you did better, or you're paid less the difference if you fell short. The maximum payment potential is calculated using your member attribution data and the budgeted maximum PMPM set by HMSA for the year. Right now, commercial patients yield up to $4.50 PMPM, Quest $3, and Akamai up to $8. Using the same 1,500 commercial patient panel from our last lesson, this would equate to a maximum of $6,750 per month, or up to $81,000 for the year, just for the commercial line of business. Keep in mind that the actual patient panel would likely fluctuate up and down over the year. You may choose to track the amount you could gain or lose in the April true-up payment, just to minimize any surprises during tax season. COSIVA displays the amounts earned for each performance measure, so you can compare this to your quarterly payments received to determine how much you'll be allowed to keep or how much you may lose out of your April payment. Now, these performance measures are not graded in the same way that quality measures have been in the past. Each one has distinct minimum and target thresholds against which your performance is compared. Let's take one of the measures as an example. The Body Mass Index assessment has a minimum threshold of 85% and a target threshold of 95%. If your score on this measure is 85%, it does not mean that you earn 85% of the maximum payment. Meeting the minimum threshold on any measure will earn 40% of the maximum payment. This means a score of 85% on the BMI assessment measure equates to 40% of the max payment earned. The target threshold is 95%. Attaining this score earns 100% of the maximum payment amount. If your performance score falls below the minimum threshold, you earn 0. Even with a score of 84% on the BMI assessment measure, you earn nothing because you need higher than 85%. With that said, there are 2 more factors in payment calculation. If you improved your BMI assessment performance over last year's P4Q or Payment Transformation Program if you're in your 2nd year of Payment Transformation, the degree of improvement is added to your performance from this year to nudge your earnings higher than just your 2017 performance alone. This means that performance that is better than last year might allow you to keep your advance payment money in spite of earning less than what you were advanced during 2017. To take it one step further, if you exceed the target threshold this year, let's say you earn 98% and the target is 95%, you can earn up to an additional 10% of the maximum payment potential. Therefore, there's even an incentive to exceed the target thresholds. Let's combine these points into a practical, typical scenario. Let's say that at the end of 2017, a doctor meets the minimum threshold for all of her performance measures, but only meets the target threshold for some of them. She has already received 3 advance payments of $25,000. HMSA determines that she is on average below the mark for retaining all of the $75,000 in advance payments that she has received so far. This shortfall translates to a deficit of $15,000, which means she was paid in advance an amount that was more than what she eventually earned. Therefore, in April of 2018, HMSA reduces her 4th payment of $25,000 so that she receives $10,000 instead of $25,000. HMSA has trued up her deficit by correcting the 4th payment to account for the shortfall in performance. For 2018, if she can perform better on some measures than she did in 2017, she will earn an improvement bonus on top of whatever she earns for her baseline performance. At the end of 2018, HMSA will again determine whether her actual performance is good enough to retain her advance payments, and then the following April pay her what she deserves, either more than or less than the amount of her previous quarterly advance payments. Thank you for joining me as we investigated the complexity of how your retained performance payment is calculated and how knowing your performance during the year helps you budget for next April's performance reconciliation. Don't forget to comment on this and other TP Academy lessons by visiting our webpage at teampraxis.com/TP Academy.